We had a special look on the markets this week with our special guest, Bob Elliott from Unlimited Funds. We thank him for joining us. Now we are going to jump into the charts with Darren. As we talked about, Jerome Powell made comments at Jackson Hole, the Fed president, and those comments gave us a lot of green, Darren.
Yeah, lots of green today. I'll go back to what we've said many times, I think, on this show is that, going back to there were people who were excited Trump won, people upset that Trump won. At the end of the day, printer's going to print and the market's going to respond the way it responds. And so today we're looking at the S&P 500 in front of you on the screen. This are the candlesticks for the S&P 500. You can see we traded right around 63.50, let's call it, and found support. We can move up this support here. We'll use this line right here. You can see where the support was, and then we came right in to resistance. I always find it so interesting how the market, like literally almost to the point, trades to certain areas. And you can see that right here where it traded right into that all-time high, got rejected and sold off, didn't quite break over it. I say that's positive on its face, the fact that we got that nice move. I'd say it's semi-bearish, though, that it didn't close above that all-time high, even on that news that potentially we're having a rate reduction coming up here in the S&P 500. For those who don't know what the S&P 500 is, it is the largest 500 U.S.-based stocks. This is a heat map. This represents the S&P 500 as its capital weighting, meaning the bigger companies get bigger boxes and the bigger companies have a bigger influence on the index. So if the bigger companies go up, so does the index. You can see NVIDIA being one of, if not the largest stock now in the market. I don't recall if Microsoft or NVIDIA are bigger, but anyway, it looks to me visually, at least, the NVIDIA is, and you can see NVIDIA is larger than the entire financial sector, larger than the entire oil sector, larger than the entire healthcare sector. So we've got a very overweighted economy going on, as we just learned in our segment with Bob Elliott for our macro discussion today, that these bubbles can keep going as long as the economy keeps meeting expectations. And that certainly seems to be the case. And the government certainly figured out ways to keep that going by printing. So
NVIDIA is bigger than Microsoft.
It is. Okay. It looks bigger on here, but I just wasn't 100% sure. And thanks for that clarity. So if we look at our 1 week performance, though, not such a great week in the market, but a 1 day in the market, not too shabby. And that all came on the backs of Jerome Powell talking at Jackson Hole. Part of the issue is the Trump administration's putting a lot of pressure on Chair Powell and his other Fed governors, including investigating one for mortgage fraud. So I guess the thinking is that they're going to capitulate at this point. At least the market certainly seems to be signaling that.
One thing we didn't cover during the all the market talk is, and it kind of just blew away because you went through, the fact that the market was struggling for the week. I think it was Meta that said they were like reducing their AI division, right? And the market really did not like that news.
They're freezing. So Meta has been on a AI hiring spree, hiring guys away from Alphabet, etc., Apple, etc., for $100 million, and they've since said, "Hey, we're on a freeze now." So it's unclear whether that means, "Oh, we've got our squad now, let's get to work," or whether it's like, the summer's cooling off.
Forget being a professional sports player, like. Go be a Meta engineer, right? But yeah, I mean that the market really did not like that news. But of course, that's all been covered up with the Jackson Hole rally today.
Interesting. Here you've got what I would call a double bottom forming in the S&P. This would be the neckline of that double bottom, suggesting maybe we go higher. So there's going to be a lot of resistance at 6,500 on the S&P. We got to break through that. And I'd say that's a little bit bearish that the good news of the rates potentially going down didn't push that through. When we look at the 10-year chart, all in all, like the rates didn't fall through the floor, right? We're still in trend. We're staying right in this area. looking at this from a technical standpoint, you can kind of see this. That's an ugly line. Let's do this one. You can see this triangle here that it's kind of forming, which tells you there's probably a decent size rate move coming. So you can see that there, where I would say that this is supply and demand getting tighter and tighter until you get a break down or break up. So I am of the feeling that there's an event coming. I think it also just happens that the seasonality right on cue. We're walking into September. Get ready for the world to be ending and the market to plunge for some stupid excuse. And then come mid-October, it just ramps up into the end of the year. So I'm just waiting for it. I don't know about you, Chris, but waiting for the narrative for our September slam to come on in.
These are the strange things that financial advisors look forward to, I guess.
I know. It seems like the last couple of years, though, we kind of get this float higher in August, and then September, the markets tend to get volatile, and it'd be some geopolitical, temper tantrum.
There'll be a reason, Darren. It won't be for no reason. We'll find a reason.
Oh, we will, for sure. In retrospect, it'll be obvious.
So clear.
Let's take a look at gold. So we've got gold, and gold's just continue to consolidate. Pretty excited, actually, on our other show we've got coming up. It's All Out Money. We've got a gold expert coming on pretty soon. So that's going to be fun here the next couple of weeks to talk about what's been happening in gold. I'm starting to see this as distribution in gold, meaning that eventually the buyers just get worn out at this area, and then it falls down and falls through. It feels like it's just been going on too long, and we're not getting any further movement. You could also say, which is interesting, that this chart kind of corresponds with the 10-year. And if you look at that same kind of triangle, consolidating triangle building up, which either we're going to break out or break down. I mean, you could make an argument, right on time, September, gold goes up when things start falling apart and the world is going to end in September, and we have our excuse for the market to fall apart. Interest rates then go down. Fed has reason to move rates down. You could see that narrative almost kind of starting to construct itself inside the markets right now. When we look at ag, bonds definitely looking strong. Bonds liked that interest rate move today. Interesting though where we're at. You can see, Dan, I just have to say, with all our Disney talk, you're getting very, very accustomed to double tops, my friend. So let's just compare the egg chart to the Disney chart at this moment.
We can't have that conversation on here. We can't talk about that.
So
Disney's a stock I've been following. I went to Disneyland. I went to Disneyland with my family, and so I've been following that just out of curiosity.
The only good news,
and Darren wants to give me mess about it.
The only good news about Disney is that you're not talking about the NFL, Dan.
Or Nintendo.
So you have a double top. So this is called a double top. This is the neckline of a double top. And so this is a much longer time frame on a chart, but you can see it goes down and it works its way back up. Now it's testing that neckline right now. So it's a really important point in the chart for ag, because if ag comes up to here, gets rejected from this point like this and goes down, that's confirming that resistance point, right? And magically, Disney looks very similar. So let's look at this pattern again. This is what guys like me, as we sit around and think about patterns in the markets, because our brains don't turn off late at night. Okay. So this is on a smaller time frame. Dan, you're just going to be so impressed that this is almost exactly like the egg chart, my friend. But here, what's interesting is you have a double top. You have underneath that, we found support around 111, 112. Trades up, hits resistance. But see that wick there? That means at some point during this session today, Disney had broke above 119, was trading higher. But then as soon as it hit that, that meant a lot of people had sells put in. And those sells then sold that price off, which then confirmed the resistance here. Now, the very next step we're going to be looking for is the follow through. So either it's going to go up like this and we're going to actually see it like you're surmising, Dan, or we're going to see the resistance hit and it will trade down and confirm that pattern. This becomes resistance. After that resistance confirms itself, there's definitely some local support around 116 in this area. You can see how important this area was on the chart because it traded around that area for 1, 2, 3, 4, 5, 6, 7 days. But once it loses that, it's got to come back in and test this support at 112. Now, the thing is, when it comes to charts, is the more often price visits a particular, so more often the chart visits a particular price, the more likely it is it's going to break through that area. So for example, if we see the next few days, this chart trade right in this area here, it becomes more and more probable that it's going to go higher. The fact that it rejected during the session today tells you that there's a lot of sellers sitting there. So when price comes up to 118, those sellers are saying, hey, I'm out, sell. And a lot of that's all happened electronically. So when you look at that on a 1 hour time frame, you can see this is that double top I'm talking about. Trades down in, finds support at 112, comes up, and this is the bearish close on this one. The fact that it broke above that, came in, tested that, and closed right there. There wasn't a bounce. So what I would have wanted to see if I said, hey, this is bullish, a break up, break down, and break further up. So as soon as it hit that, it would have shot up because people would have said, nope, that's a good price. That's a breakout. So the day traders are scalping that trade. It's called a scalp trade. There is a little bit of good news on this chart for you though, Dan. And that is that when we look at the 5-minute or the 10-minute charts, this is now looking in candlesticks of 10 minutes. The fact that the chart hit right here, so we'll call it 118.69 all there, hit that support that it bounced and traded up. The bad news is it also then confirmed that neckline is resistance. Still got to see a few more days, but I'm not feeling it, my friend.
Why don't you show me that day chart again? Whatever the one was that you were just showing.
This one?
Yeah, and zoom in a little bit more, like how you had. Yeah, perfect. So you see how you have that right there in the right around June. You got a little bit of a peak there, and then it falls down. No. Right back how you had.
Oh,
it.
right here.
Yeah, right in there. Yeah, and then we get a real high peak, and then we get a third one. That to me just really looks a lot like a castle to me, buddy. That's the market talking to you. So I see signs, in the chart that maybe you don't see. So
it might be it might be a castle, but you notice how castles, they go up and then they come down and then they're over. Well, same with this castle, buddy. So, but
I think we finally found a conversation that bonds might be more interesting than.
Yeah, I think so. Darren decided to make an example of me today on something that I'm purely following for educational reasons. What else you got, Darren?
It's only because it'll be like 6 a.m. and you'll blow up our Teams thing with all the advisors chatting, saying, yo, you see Disney, man, Disney. And it's just, the middle child in me's got to push a button.
Anyway.
I can't help it. Sorry.
Anyway.
Sorry. So let's talk about oil, right? Oil continues to do nothing. What I will say, though, is the fact that it's hanging down lower. Let me get on. Yeah, we'll take the daily chart. Actually, we'll do the week. The fact that it's hanging towards the lower end, I actually think that's a good news geopolitically, right? That perhaps some of this peace talk that Trump's been involved with Russia and Ukraine might be actually getting somewhere, because we would see oil going higher if that was not going to happen for us. But it's hanging out to the lower end of that trend for sure. All eyes now on mortgage rates. Sure be nice to see some relief on mortgage rates, because it's looking to me like the housing sector is pretty weak. That was an interesting point, I think, that Bob Elliott had today. Chris, I don't know if you caught that, but he was like, hey, yeah, like housing doesn't really impact the economy that much. And boy, that's really different than my perspective on it. I feel like the number one consumption engine for the economy is housing. And we've certainly seen a slowdown that on some levels, will defer to Bob Elliott and his economic mind. But my experience is that that's where we see a ton of pull through from the consumer.
Yep, I'm with you. I mean, I've always heard that was a big driver of the economy in the U.S., but I'm with you. I'll go with Bob's take is probably the correct take.
For those who don't know, and Danny did a fabulous job introducing Bob today, but Bob is like one of the deities of the macroeconomist world. Like he's a legit macroeconomist, thought leader in the space. Chris and I were just weekend warriors.
And we found a way to say bruh and riz and all kinds of sus Gen Z slang to him. So I think we represented ourselves well.
Way to embarrass us, buddy.
Don't paint me with that brush. You found a way to say that stuff, not me.
Low key, on God.
It's like when I'm taking my son and all his buddies to basketball practice. That's what you sound like, Dan. It's awful. Okay. So Dow Jones Transportation, leading market indicator, looking positive. IWM, leading market indicator, looking really positive. Rates going lower. Well, that's good for IWM and exportability. When we look at SOX, the front end of the risk curve, just peaking at all-time highs right there, just sitting on going higher. That's all positive because the semiconductor is like that front end of the risk curve, along with IGB.
Go back to IWM real quick, just because, small U.S. stocks have really been in this range for, I mean, this chart makes it look like it's not been that long, but if you zoom in on that, it's really since 21-ish, we've been in this range. 20 actually looks like
right here. Yeah.
And we've experienced a lot of strength off the bottom in small stocks since April. They've kept up with the large caps. In days like today, they've far exceeded them. So I think that's a really important thing to keep an eye on is even if we see the fading in, say, the Mag 7 and some of the concentrated areas of the market, do the other parts of the market that have just lagged for so long take over and start doing well and lift the overall index and the overall market? Or is this just another false hitting of the ceiling for the small companies in the U.S. and we're going to go back into the range for another period of time?
I think it's too early to tell, Chris, but yeah, I think that's high likelihood based upon that chart. I would say generally things look pretty strong, though. I want to see some follow through on Monday. The fact that they're talking about lowering rates does also bring up the whole question of stagflation, which is when growth stagnates, but inflation stays high. I think the Fed's running that risk by lowering rates. I guess history will tell whether or not Chair Powell is capitulating politically and how that plays out. But I think the Federal Reserve's in a pretty tough spot right now. Overall, charts look good. Week was okay. Great bounce for Friday. It was not looking like a good week. And I was like, oh, September's here early. And then Chair Powell came out and said, have a dove. We'll print some more money. And that's what you see in this candlestick. It's a bit of a hammer candle on the weekly chart. Still in range, though. Until we break out in range, it's just the float higher until September. Well, we'll close it out for the week. Appreciate all those who hung around with us for the extra 20 minutes on the charts this week. And take care.
Thank you so much. Make sure you subscribe wherever you're at. And we are on the markets from Sonoma Wealth Advisors. We appreciate you checking out the show, and we will see you next week.
You're up to date with Fermata on the markets. Learn about how the Fermata Advisors family of brands can help your family and business in finance. Sonoma Wealth Advisors, a comprehensive, holistic finance solution offering financial planning, asset management, and tax planning. Take our free wealth analysis now at sonomawealth.com. Fermata 401k, business retirement solutions for small and large companies with a fiduciary commitment. Learn more at fermata401k.com. Fermata Tax, personalized tax services for yourself, your family, or your business with an emphasis on efficiency. Find out how at fermatatax.com. Fermata Insurance. Appropriate insurance is an important part of a financial plan. Find out what coverages you may be missing at fermatatainsurance.com. If you haven't already, like and subscribe to Fermata on the Markets on YouTube, Spotify, and Apple Podcasts. Fermata on the Markets features human hosts, editors, and voiceover talent. Music by Dr. Delight on Soundstripe, voiceover by Joan Alloway Nash. Thank you for listening to the very end. We appreciate diligent viewers and listeners. Fermata Advisors LLC is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempt from registration requirements. This content was produced by Fermata Advisors LLC, DBA Sonoma Wealth Advisors, DBA Fermata 401k, DBA Fermata Tax, DBA Fermata Insurance. The opinions expressed by Fermata Advisors LLC on this show are their own. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Viewers and listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.